Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which are of DraftKings, ticker symbol DKNG, as well as Kinross Gold Corporation, ticker symbol KGC, and also Matterport, ticker symbol MTTR. And so in this video, this is just a rough cut request, so thank you for the request. I'm going to go through these tickers and I'll put timestamps down below so you can skip ahead to the ticker of interest. But yeah, I'm just going to start with Matterport and then I'll work my way towards DraftKings, as they do have earnings coming up on Friday morning, which I wish I could cover, but I have to be at work, unfortunately. But yeah, so looking at Matterport, the last time I put out a video on them was January 30th, so this red candle day. We were testing a pretty significant level that I had gone over in that video, and during it I had suggested that we could drop down to fill a gap and then possibly get rejected around here. So I just want to go over some of those levels that were in that video and also some that I have since added, which I probably added during a live stream. So you should always make sure you tune into those. Okay, so here are all of the levels. I've gone over these purple lines before, as well as this red dashed line. And then also in the last video, I did do this Fibonacci retracement, which highlights a number of key levels. And so basically, following last video at the end of January, we did drop down to fill this gap marked by this blue line here at right around $2.26. Did get some nice consolidation there before moving up. And I had suggested in that last video that we might get a rejection right around $2.56, which is where this blue line gap is, and also that being the 50% retracement of that Fibonacci at a price of $2.56. So just, a lot of confluence there with levels suggesting that there's going to be a lot of resistance there. Also with this volume profile, we do see that there is a volume shelf just above there, suggesting it's going to be tough to get above those levels. And then so we could not get up to that 50% retracement, but we did get what looks like a fake out close above the 382 at a price of $2.46.4. The close on February 12th, so I believe that was Monday, we did get a close at a price of $2.47, big wick up, but then we got a pretty big drop to the downside, as most things did in the market on Tuesday, so that's not a terrible surprise. But yeah, that does look like it was kind of a fake out to the upside because we got one close above that level. Really, we want to see two closes in order to get confirmation. And so with that drop, we did return to that gap fill area, also retesting this purple line at $2.25. Just thinking in quarters and stuff, that's a level that's psychological, and we did return to it, bounced with a low yesterday of $2.25. But we've had so much consolidation down there. I do think that we have put in a pretty good floor, and that I do think we could be rallying in the coming days, perhaps weeks, likely weeks. And really, we did close above a couple levels today on February 14th, happy Valentine's Day, closing at a price of $2.40. And so one of those levels is a new Fibonacci retracement that I did, going from the high on January 29th to the recent low here of February 2nd. And I didn't include all of those fib levels. I really just wanted to highlight the 382 at a price of right around $2.30. So we did get a close above that, actually an open above that today, and actually close well above, this 236 level at $2.34. So hopefully we can hold that level, consolidate, start to move higher, break above the 382, hold, get two closes above that level, above $2.46.47. That would really be key for us to start making attempts at this gap fill at right around $2.56. So, if we can hold above, $2.34, that would be really good. Worst case dip in this good case scenario will be going down to $2.30, respecting this yellow fib level, the 238, as support before continuing higher. But yeah, I mean, I do feel like there's been so much consolidation below us. I don't think there's as much risk as there was before of us going down, unless, you think about this as being a flagpole and this perhaps being a bear flag. So, I really just, keep an eye on the 382. We don't want to be putting any more closes below $2.30. So yeah, I'd just be watching that level. But, these purple lines do seem like they have been pretty useful as far as identifying the bottom and taking advantage of that. So hopefully you guys were able to do that. And then, yeah, next on here, I'm going to go over KGC. This is one that I went over in a live stream, and I've gone over the GDX, which is the Gold Miners Index. Looks pretty similar to this, which, I was kind of under the impression that it's a time to be bullish on gold miners. But I had noticed this not only in KGC, but also in the GDX, that there's like this little bit of a head and shoulders pattern. And so I suggested during a stream that this looks like we could be at a neckline break. And that's exactly what looks like has happened. So we did close on the day Thursday at $4.99, also being just a penny below that psychological level of $5. So it's not looking too great. And yeah, I mean, as you note here, I do have an alert at $4.50. I do expect price to go down that low, unfortunately. And that is really based on, I believe, just doing a measurement from the top of the head here down to the neckline, and then taking that measurement, which is about $1 down, taking that from the break of that neckline, and that would bring price to $4.29. And I guess really I just have this, let's see, this alert here. If I can click on it. Man, I don't want to click on it like that. Quit. Yeah, go away. I'm going to move the volume profile so I can actually see this better. Okay, yeah, so we see that dashed line, $4.50. Actually, what I was looking at is just this gap here. Filling that would be going around to a price of like $4.60. So I could definitely see price coming down there if we do see continuation here. Let's see, earnings were released today, and so it actually looks flat in the after hours. Let's see. Let's see. Yeah, that's actually not too surprising. I guess there's a bit of a sell-off, and maybe earnings weren't too surprising. They were expecting a surprise, they didn't get it, so it's kind of flat. So maybe this could mark a bottom, and I believe, let's see, maybe there's a little gap right here. Let's see, the high on October 12th is 4955. The day after the low is 4965. Yes, there was a little gap there that was just filled. So, perhaps that is what was pulling the price down, and we're going to get another test of that neckline, but from the bottom, that acting as resistance. And so if we do go back up to that neckline, I'd expect that to act as notable resistance, and really that just be a confirmation of this breakdown and for it to continue lower. So just be cautious of that. But yeah, I mean, this just to me looks, pretty bearish, and it has played out as I feared. I never want to give bearish news. But anyways, since they did just have earnings today, and speaking of earnings, I'm going to switch over to DraftKings. And so looking at this chart, I do got that yellow line up there at $44.79. That's going to be pretty significant. Also, I do think I wanted to be looking at the volume profile here. And for this, I'm actually going to switch over to the weekly time frame, because that yellow line does seem to me like it is some pretty significant resistance. You can see in this volume shelf, we've got some historical consolidation up there. And I actually had doodled on this before. It looked like there was a little head and shoulders pattern up here. I'm not sure if that was valid, but it did seem to play out with price going down to below $10 a share. So that was pretty bad. But yeah, so looking at that yellow line, $44.79. All this consolidation up there, and that really being based on this pivot high as for the week of, I guess, the first week of June 2020, hit that high, and then it's also served as some support throughout this like little head and shoulders pattern. And then once we broke below that, we haven't been up to this level in a while. And so I could imagine that any bag holders, who bought up here and they've just been holding this whole time, I'm imagining they're wanting to take a breath of fresh air when that price gets up to that level. So I think there's going to be a lot of resistance there. So with earnings coming up on the I think it's the 16th, the morning of the 16th, For me personally, I don't have a position in DraftKings. I would not want to be establishing a position in DraftKings. If I did have a position with a price average down here, I'd be looking to at least trim to protect myself in case it tanks. And I could definitely see that happening because of this big level of resistance that we're just under. And then if I do look at this on the daily time frame, you notice I do have this alert here at $35.53. That was the high on January 17th, and we did gap up there. So, if I was looking at this chart thinking about earnings here, I guess earnings are on the 15th. Or maybe that's just, what's listed here in Webull. Maybe that's wrong. I thought it was the 16th. If it is the 15th, that's tomorrow. I'm sorry, I'm doing Coinbase earnings, so I won't be able to do it. But tune in for that if you're interested in Coinbase. But yeah, I see it coming up to resistance here. I see, that volume shelf that I was talking about, just really pronounced, stands out a lot. And then, looking back on the daily here, coming up to that level and seeing this gap down here, I would not want to go long right now. It just seems too risky. Possibility it breaks above this level, but to me, the odds are more in it turning down. So I would be careful with this. If it does drop, it possibly could find support around the top here. That would be my first guess, right around $39. You see this volume shelf here start to stick out because of this consolidation. So that could be a level. But really, ultimately, maybe it stalls out there. Maybe you get a little bit of a bear flag there. But I would expect price to be coming down lower to this volume shelf. That would be right around, $35 to $36, filling this gap. So that would be my first bet that we would be seeing this, coming down. And then I just want to do a couple Fibonacci retracements just because, I like doing these. They're intriguing. And so just going from that low, that recent low to this high here, these are some levels that might stand out. And really, just like the 786 is at 34.56. That would correspond to filling this gap. But, maybe it would be caught by the 618 at $36.57. So that's what I'm thinking about that. I guess if it was going to the upside, I could do a retracement coming down here. This is all just approximate, forgive me. And, from that 100% retracement, yeah, we're right at the 1618 extension of that. So that's just another level suggesting, hey, this is the top. So, and if I were to adjust this Fibonacci retracement to include, sorry, man, I'm doing this, without editing. I'm trying to be smooth, but I suck sometimes. If I were to look at that too, 618, maybe it could go up to $51, $52, but it's a pretty big move, 25% move following earnings with all this resistance above it. So I feel like that's pretty unlikely, but maybe you want to, see if you get lucky with that. And then also I wanted to do one more retracement. I just got to do the auto axis here. Sorry about that. Just going from the low here to the high. I'm just intrigued by this to see if it shows a level that does stand out. So this is, all just approximate. And look at that. The 236 looks like it lines up pretty perfectly with that gap. So for me, I'm thinking this is going down. So if I was a shareholder, which I'm not, I'd want to at least trim to protect myself so I could buy back those shares at a lower level once support has been found. But, in all honesty, if I was a shareholder and I was in the green, I'd want to completely exit this, but also, I don't like to risk it over earnings. Maybe you do. So, you got to do you. But, I'd be happy to do a follow-up on DraftKings next week. And so just make sure, that you like this video and share your comments that you did enjoy it because I'd be happy to do a follow-up. And, if you did find this video helpful, whether you're in DraftKings, Kinross Gold, or Matterport, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more of these. Thank you so much for the request. A lot of fun to do this.